Hello everyone and welcome to another edition of the Forex Technical Market Update. Okay, so we are on the lookout to see if the euro will hit parity against the US dollar. Everyone is saying in the media and across the news world really is speculating that the euro is headed for parity. Normally when you see something like this, it gives me caution, but that is what we're looking for in the weeks to come. Will the market reverse at these levels here, or will we eventually see parity with the euro versus the US dollar? Taking a look at the monthly chart, we see that looking on this monthly chart, we see that the market broke out of the triangle, this triangular consolidation over 3 months ago. And one of the important things in the Forex markets are triangles. When the markets break out of significant triangles, we can see very large moves in the Forex market. And that's what happened here with the euro, looking at the monthly chart of the euro. And we can also see this in the US dollar index. This is the monthly chart of the US dollar index. And we see this was a triangle here. In the earlier updates, we spoke about this, and the market broke out of this triangular consolidation. I mean, this started in 2005, 2006. The market was in a consolidation and has broken out to the upside. And as you can see, this move is pretty violent. Okay, so back to the euro, where this is the daily chart of the euro. We're seeing if the market will eventually hit parity. Taking a look at the monthly pivot points, we see that we're very much below the S2 pivot point support in the euro, which is 109.44. So we are below that level. So you could see some slowing of the momentum to the downside in the next coming sessions. Critical support is down at the previous low of 104.62. If we see the market breach and close below 104.62, we could be heading down to the 103 or 102 level, and resistance is up at the 109 and 112. Okay, that is the euro. Taking a look at the Japanese yen, we see that the market is up against resistance in the 122 level. Let me just draw. That's a resistance at 122. As we can see, the market is trading just below this 122 resistance level and has been trading at this level for the last 4 or 5 days. And critical support is at 116. So if we fail at this level, we can see at the 122 level, we could see ourselves entering a channel pattern on the Japanese yen. So if we get a sell signal, sell candle, we could be heading back down to test this 116 level on the Japanese yen. Okay, moving over to the British pound, we see that the pound last week, let's go back to the monthly chart. There are some pretty significant support levels down by this 148 area. Let me just draw support here at 148. We see in previous sessions the market in 2013, the market hit this 148 level, traded up, came back down near the 148, breached it slightly, formed a doji candle and moved up pretty significantly, over 2,000 pips from that level. So we're currently testing this level now. We broke below it on a weekly closing basis, but we're going to see if the market is able to remain below this level or will snap back from here. So that's why you can look out for the British pound. We're at critical support in the pound. Okay, moving on to the Swiss franc, and as we can see, remember in January when we had the Swiss announcement, the market declined from the 102 level all the way down to the 84 level. And it's funny enough that the market has given back most of that decline and has rallied up to the $1 level. So that's pretty interesting. We're going to see if the market is able to close above solid resistance at this 102 level. So that's what we're looking for in the sessions to come. Opportunities out there. We see a triangle consolidation in the British pound, Japanese yen. If you draw a line here, and if you draw a line there, so we'll be looking at this triangular consolidation. The rule is 80% of the time, roughly, when you are entering a triangle in an uptrend, the market most of the time will break in the direction of the trend. Now it could very well break below this 20% of the time or so. It will break below. So we're just on a watch to see which direction this will break. Critical support is at the 175 level, and if we trade below 175, we could see further losses in this pair. And if we trade above this 185 level, we could see a retest of the 190 level. Finally, let's look towards the gold market. The market is still declining, where we still have a pattern of low highs, lower lows in the gold market here. And critical support is down below the 1100 level. Actually, let me get the exact price is 1132. So we have very strong support at 1132, and it will be interesting to see if the market is able to punch below the 1132 level. It's a weekly chart of gold. Now, if we go below the 1132 level, there is no support of note on this chart, and we could see a retest eventually of the $1,000 level in the XAUUSD, which is cash gold. Remember, the Forex markets are always offering up trading opportunities and always offering opportunities for us to profit. If you would like to have our premium trading signals sent directly to your brokerage account, you can click the link below this video for more information on how you can get signed up for that, because I know some of you may not have the time to learn how to trade at this point in time, but recognize the opportunity to profit in the markets. So you can click below this video to get more information on how to sign up for the premium trading signals that can be sent directly to your trading account on autopilot. So there will be no need for input on your side. So click on the link below. Thank you very much for listening, and have a good trading week.